What's going on, everyone? Welcome to another episode of The Remote Real Estate Investor. I'm Michael Albom, and today I'm joined by Jeff Thompson, who's the Chief Blockchain Officer here at Roofstock, and Sanjay Raghavan, who's the Head of Web3 Initiatives here at Roofstock. And we're going to be talking today about what blockchain is and how it applies to us as real estate investors. So let's get into it. Jeff and Sanjay, thank you so much for hanging out with me today. I am super excited to chat with you both.
Likewise.
Thank you for having us.
Thank you.
No, absolutely. Absolutely. So I know a little bit, obviously, who you guys are because we work together. But for anyone who isn't familiar with you, give us a quick and dirty description, who you are and what is it that you're doing at Roofstock. Jeff, I'll kick it over to you first.
Sure. So I'm Jeff Thompson. I currently have the title of Chief Blockchain Officer at Roofstock. Previously, I was General Counsel, and I've been a lawyer by training for a long time, and now heading up the blockchain initiative at Roofstock together with Sanjay.
Awesome.
Great. I'm Sanjay, Head of Web3 Initiatives. Previously, I was leading Securities initiatives at Roofstock, coming up on actually 3 years this week. So it's super exciting. Tomorrow, I think.
Right on. So really quick follow-up questions for you both. Jeff, were you just like a crypto guy in your everyday life? I mean, how does a lawyer turn into a blockchain official at a company at the C-suite level? I mean, that's incredible.
Yeah, I kind of backed into it. That wasn't a plan, but I had been advising friends since 2017 during the ICO boom, the initial coin offering boom, when I started hearing people in my network talk about it and say things like, oh, well, it's not a security because it's a coin, so you don't have to follow the securities laws, And I thought, I don't get a lot of the technical stuff they're talking about, but I know I can help them with the legal stuff. So then I was acting as legal advisor for a couple of years, and then Gary, our CEO, knew that. And last year, maybe 12 months ago or a little bit more, our board came to our CEO and said, "You guys, Roofstock, you need to get smart on blockchain. We're not saying you have to do it, but we want you to have an idea of whether there's something there." And so he asked me and Sanjay, because he knew I had some crypto background, and there's a lot of legal, and obviously the financial structuring is critical as well. So we kind of got into it together.
Awesome. And Sanjay, at the risk of sounding like a total rookie, what the hell is Web3, man? I hear so much about it. Break it down for us.
All right. So I know it's so let's take a step back, right? So Web 1, which was kind of the first incarnation of the internet, right? There were sites that had static information. You could like type a URL and go and like consume that information, but that's all you could do. Is just a read-only type of a platform. And then a few years later, the internet evolved to kind of Web 2, which widely is known as the read-write version of the internet. So not only could you consume information, but you could go and provide information and content to the internet as well as a consumer. And what happened with Web 2 was that ability to read and write created all kinds of new interactions. And that allowed a lot of kind of the internet economy to bloom around it, where the Googles and the Apples and eBays and the large companies were able to curate a lot of the content and manage a lot of the traffic. But with social media and stuff, you were providing content as well, and you were consuming content. There was e-commerce. So a lot of these things came about, but the power resided with a very few large corporations that kind of controlled all of these transactions. And when Web 1 started, the kind of original vision behind it was a more collaborative environment where the consumers and the creators and consumers could actually work with each other and use a token economy and share, revenue and monetization. So that idea of, read, write, and then adding own to it at the end. So it's a read, write, own type of economy that's decentralized, permissionless, trustless, has its own native payment rails, where the content creators and content consumers are all working together. And there's no power resting with large corporations, but it's giving power back to the people. So that's how I would sort of succinctly describe Web3. And it's a sort of a new way of thinking about things, and it's super exciting.
Okay. Yeah, it does sound super exciting. And so give us all like a background. Again, treat me like I'm a third grader, because that's probably my IQ level when it comes to the crypto and blockchain world. Give us all an idea of like what is blockchain and what is cryptocurrency. And then we'll get in maybe on how to be thinking about it with regard to the real estate space and why it even belongs here.
You want to take this, Jeff?
Sure. So the core concept for blockchain is that it's a network that can be validated. The data that's recorded onto the network, which is the chain, can be validated by a limitless number of third parties who aren't organized or connected in any other way. So these are called validators. I could have one, you could have one. They're just computers that read the information that's coming in from the blockchain. They perform some mathematical calculations, and then they verify that the data that's been submitted is what it says it is. And then at that point, it's formalized and recorded to the block. And then, so these blocks are really just pieces of data that have been put together. And then as you form one block after another, that becomes the chain. So it's really just a chain of data that's been validated by third parties that are completely decentralized. So why is that important? Because it means that there's no third party, a corporation, a government, whoever it might be, that can intervene in the functioning of the blockchain. Once it's up and running and you have enough people who are validating and writing to the system, it goes infinitely and it can't be shut down. And so the first use case that really grabbed a lot of attention was payments, right? That's what Sanjay was alluding to in the early, the current Web 2 universe. You don't have an easy way to send value to another person without going through a bank or a financial services company. Blockchain, Bitcoin allows you to do that. It's just simply on the chain. If you have value in the form of Bitcoin, you can send it to any other address anywhere in the world instantaneously, and no one can stop you from doing that. So this really arose from kind of an idealistic perception, like we have to guarantee our own freedom. The government can't intervene and prevent me from sending money to you, and that's where it came from, like the sophisticated cryptographers, mathematicians who had an idealistic view, and that's where Bitcoin came from. And then since then, it's expanded to a lot more utility, where you can do many more things other than just send payments. You can, NFTs, you can have lending platforms, you can have social media companies that are effectively on a blockchain and can't be shut down or controlled by third parties. So that's the overview of kind of where it came from and why it's important today. Sanjay, anything to add?
Yeah, no, taking a step from there, right? And that's exactly right, Jeff. The original idea was, this all came about during the great financial crisis of 2008 to 2010 or so, where people thought that these, financial intermediaries are, in control of our lives. And so Bitcoin kind of, that was the reason why it came about as a peer-to-peer system where you can exchange value without, involving these intermediaries. But then over the years, we've kind of seen that world expand rapidly. And there's other cryptocurrencies now. And one of the notable ones is Ethereum. And on the Ethereum network, there's actually the ability to create what's known as a smart contract. And a smart contract is essentially a piece of computer code that will execute based on a certain event occurring. And why that is important is, if you think about it from a disintermediation perspective, in a transaction where two parties are involved and party A needs to provide a good or service and party B needs to make a payment for that, you need a way to make sure that both parties are adhering to their portion of the agreement or contract, right? And so oftentimes what happens in the financial services world is, in order to make sure that both parties are compliant with their aspects of the contract, you create an intermediary in the middle that takes that position of collecting information or payment from both parties and sending it across. And a very common example of this in real estate, Michael, you as an owner of dozens of properties, you've gone through this process many times, but there's an escrow agent involved.
Exactly what I was thinking.
Making sure that, the property title moves over to, the buyer and the money goes to the seller, right? But imagine you had a piece of computer software that executed on a sale, and it made sure that the two parties were both appropriately receiving what they were expected to receive. And there was no intermediary involved in this process. So this all executed basically on the click of a button, right? Like that would be game changing in the real estate world. And that's what we're trying to do now with Roofstock onChain.
Holy crap. For anybody who's not watching this on video, I just had to pick up my jaw up off the floor because I was totally agape. So I have so many questions. I want to take just a step back. And so, Jeff, you were talking about these validations that can be done by any number of people. So I'm thinking about like a real world example. So if I go to the store and I buy something with my credit card, I put down my credit card, they give me the goods, and then in this case, would the validator be like the credit card company that says, look, this is the charge that, like, how do I think about that from like a traditional example?
That's exactly right. The validator, or usually there are multiple, but they play the function of the credit card company. But instead of sending your data and the transaction data to the credit card company, where the data goes to the credit card company says, okay, this person has credit and the transaction is now going to be posted on their account. And then they send the okay back to the merchant. Instead, the merchant would send the data to a blockchain. The blockchain validators would pick up that transaction. They would validate that all of the details are the same. Usually, it's a small number of validators that have to agree on the transaction details to make sure that there aren't nothing's been missed. And then once they've reached that consensus, whether that's 5 or 10 validators or whatever it may be, at that point, then it goes back to the merchant and it says now the blockchain has been updated to show that this transaction occurred. Jeff or you or whoever was spending the money now no longer has that money. So I had that money in Bitcoin. I gave it to the merchant. The merchant sent it to the blockchain and said, hey, guys, can you verify that you're debiting Jeff's account and you're adding it to my account? Everyone said, okay, verified, validated, coming back. Now I can't spend that money. I don't have it anymore. And it's in your account. So that's, a high level of how that would work.
Okay. And a couple of more things there, right? Like if credit card transactions for small dollar values is one example. But if you look at larger dollar values, and there's ACH transactions that take 3 or 4 days to get validated through the banking system. Yeah. A wire transaction, if you're trying to buy a house and you need to make a wire payment, you're rushing to the nearest retail branch and scheduling an appointment to go and do the wire,
right?
It's
such a pain.
And it's all a total pain. And like, imagine you had a way 24/7, right? Like you're browsing a site today, you find a property you really like, you want to buy that property. It's Sunday night at 10 p.m. You just click the button and your wallet says you have enough money, and the smart contract validates that you have the money, transfers the property over to you, right? Like imagine a world that's like that, where you don't have to worry about waiting 3 or 4 days for an ACH, or running to your bank and getting an appointment, waiting in line to get a wire done. And it's all literally, you're doing all this from your computer, click of a button 24/7, and you send payments to anywhere in the world, right?
And the cost is, in most cases, negligible. The wire fee is whatever, $35, $50.
Right.
It takes a day, some amount of time to process. ACH could be clawed back. The clawback concept that exists with ACH, that doesn't happen in blockchain. That doesn't exist. Like once it's final, it's validated, it's done. And you could, a simple payment transaction might cost from a few cents to a few bucks, but it's not going to be anywhere near the cost of a wire transfer.
And the transaction is immutably recorded on the blockchain. Nobody can contest it, because you can go and open up that transaction on the blockchain and say, these two parties agreed to this transaction, and it was hashed on the blockchain, and there's this unique hash that represents this transaction, right? So there's no disputing it later on. Two parties agree, the transaction gets done, it's instantaneously recorded. And so that makes this platform as a technology choice, you have innumerable number of possibilities, because once you have those types of payment rails, you can build all kinds of applications around it.
This is insane, you guys. So like, we were talking about the validators, and Jeff, you were saying whatever 4 or 5 or 10 validation points, and people are doing it. So is it literally like people on their computer going, like watching their screen for these payments going back and forth, or is this happening automatically?
No, it can happen. It happens. It's automatic. Yeah, you set up a server that has the right hardware. There are different hardware and software requirements for different blockchains, but it runs silently in the background, or in some cases, it's loud because there are a lot of fans because it's
A lot
burning
of fans. I've heard that.
Um,
Yeah.
yeah, but it's happening 24/7 in the background, and in most cases, it's just set and forget. You don't have to be online all the time doing anything manually.
And one other thing I wanted to point out was, obviously with banks, you can't go there on weekends, after hours, bank holidays and such.
Right.
But even a MasterCard or Visa, if they're having a problem with their servers or something, you can have outages where, for a couple of hours, you're not able to do any credit card transactions, right? Whereas on the blockchain, that doesn't happen, right? Because there's blocks can be like, even if my computer was one of the validators, but for whatever reason, it's not working right now, there are hundreds of other computers that are doing the same thing, that are waiting to pick up the next block and compute it and solve the puzzle. And so, as Jeff was saying earlier, once the blockchain is up and running and there's, enough infrastructure in terms of validators that support that blockchain, it's permanently out there, and you can't shut it down.
So that kind of brings me to my next question. And so you both were talking about this decentralization aspect. And I think I've heard so much about the crypto world. It's like getting away from big banks and governments and that sort of thing. But if this information is, it's public at this point, right? Jeff, when I send you money or buy a service from you, it's now public information.
Just to clarify on that, right? The part of the information that's public is that this wallet address transacted with this other wallet address. But it's not necessarily public that, Michael transacted with Jeff, right? So what's publicly stored is just the, So, when we talk about privacy, oftentimes people use the words privacy and anonymity interchangeably, but they're two different things, right? In one example where there's just two wallets transacting with each other, you both still have full anonymity, but the privacy concerning the fact that a transaction occurred between two wallets, that may be public information. But that's the kind of subtle difference.
Got it. Yeah. Okay. That makes total sense. Because where I was going with the question is, if I send Jeff money for a service, that could be a taxable event in the traditional world. Like if you were a credit card company or you were a merchant, I send you that you have sales tax to pay. So I'm imagining governments point to me sending you money and say, well, now we're going to tax it. But Sanjay, what you're saying is that the actual dollar amount or what it was for might not be available to them. All they could see was someone sent money to someone else. End of story.
We usually the amount of money that went from A to B, but people don't automatically know who A and who B were. In the US,
or what it's
for, right?
Yeah.
In the US, people are required basically to report their own earnings, and that's whether it's in the crypto side or non-crypto side. But you're required to report your earnings, and in other countries and jurisdictions, they've passed laws where crypto transactions are not necessarily taxable. So, if you bought Bitcoin for $5,000 and sold it for $20,000, you may not have capital gains taxes in other jurisdictions. In the US, we do, and that's self-reported for the most part.
This is so nuts. Okay, so taking one more step forward, we're talking about these coins. We talked about Bitcoin, and we mentioned Ethereum as well. What gives these things value? Is it just that we have generally, the same thing can be said for the dollar. It's enough people have accepted, or any currency, enough people have bought into this idea that this piece of paper that has an old president's face on it is worth what we've decided it's worth. Same thing for Bitcoin and Ethereum?
Exactly the same.
All right.
Yeah, nothing else. There's nothing else to it. We all agree today that Bitcoin is worth 20,000. If it goes up, then that's literally the market price. It's set by the people in the market who are transacting on every second, and so it's a very clear pricing mechanism.
In a way, it's pure demand and supply that drive pricing for these types of alternative currencies or cryptocurrencies. The dollar, for example, we price a dollar bill to be worth a dollar, right? And so you'll always be able to redeem $1 for a dollar, but inflation and other characteristics might make it less valuable to you, right? Like if a loaf of bread was 50 cents and now it's a dollar, you're paying more money to get it, but you're not paying more bills necessarily. Like the dollar bill is always a dollar bill, right? Whereas one Bitcoin or one Ethereum, its value can go up over time, almost like the stock market, right? If you're looking at a share of Microsoft is $100 today, but because we all think Microsoft is very valuable or Apple is very valuable, and the next iPhone is the most sexiest thing that's come out, and therefore we think we should put more value to the Apple stock, right? So the concept is similar with Bitcoin and Ethereum. It's simply people. There are people who are buyers, and then they're long on Bitcoin, and then there are people who are short on Bitcoin. And if there are more people long than short, then the price is going to go up. If there are more people short at a particular point in time, price will come down.
Okay.
It's pure demand and supply.
Cool. And so we mentioned, I think you both mentioned a couple of different use cases for the blockchain and for crypto. Where do you see this going? And for Roofstock specifically, maybe you could talk about what we're doing as a company with regard to blockchain and where you see it evolving from here.
Sure. So the easiest use case for the blockchain technology is for something that is entirely on-chain, right? Payment is a perfect example, right? I send you something of value, call it Bitcoin, you accept that, and that's all on the blockchain, and that's pretty easy. What we're doing is, we think, taking the next step forward for blockchain, and we're not the only ones, but we think that we do have something to add here, which is to bridge blockchain to real world assets. And that's where things start to get a little bit tricky, because let's say that you have a home, you call it a home on chain, a tokenized home, whatever it is, and you have a token, a blockchain representation of a home, but it's a real world home. And so, you say, oh, I go to my blockchain wallet, my crypto wallet, and I see I have this home token. That's great. But let's say it's not the home that I live in, and in fact, it's a home somewhere else in the country, and I haven't been there for a while. How do I even know that there's still a home there, right? And if I want to sell it to you, you like the idea of using a smart contract to buy and sell this home. You like the idea of having a one-click transaction, of having certainty that you're going to get the home token in exchange for your money. That's all great, but how do you know that you're actually buying a real home and not just something that is called a home on a blockchain, whatever that even means, right?
Right.
And so that's where we've spent all of the last 9 months and the better part of the last 12 months diving into the nitty-gritty legal details to understand, and practical implications to understand how we can put this together in a system that works. And the answer is, you have to have some type of validation from the real world as well. Obviously, the scenarios that I just mentioned, we can't allow that to happen, where someone purchases a home token and finds out that the home burned down 3 months ago. So, you just got nothing. Right. And so the way that I think what Roofstock can bring to this equation is the deep, detailed knowledge about how real estate transactions work, plus the blockchain structuring, the legal implementation. And that's the value add that we have. I think there are a lot of others in the space, and we encourage everyone to get out there and try to build. But we do see others who don't have the real estate experience, and even though they have a beautiful blockchain strategy, they don't know how to connect that, and that you end up with something that's not useful. So what we're doing is, designing a system that ensures that before any home is transacted, it's gone through all of the usual checks and balances that are necessary for a real estate transaction. An inspection has been done recently. We've done, made sure that taxes are paid, made sure that insurance is in place, made sure that the title is unencumbered. We do all of that because you have to do all of that. No one's going to buy it if you don't. But we do that behind the scenes. And so by the time that you as the buyer come to see our site and you see the home tokens that are listed there, that you have a data room that shows all of the documents that I just mentioned and more. So your diligence is already done for you. You don't need an inspection contingency because you have an inspection report sitting right there. You don't need on the flip side, you don't need an escrow agent because the smart contract simply it won't perform its function unless the buyer has the funds that it says it has. So, the smart contract at the time that you as the buyer purchase, you click, I want to buy this home. The smart contract checks, do you have money, the right amount of funds in your wallet? They check the other side. Does the seller have a home which has already been approved by Roofstock to be sold? Yes, the transaction happens and it's done. And if one of those isn't true, then it fails, and we have to go back to the drawing board and fix whatever was wrong.
Right, and then to add to that, right, the kind of the first version of smart contracts and NFTs and all these things that came about on Web3, a lot of those assets themselves had the value in it, right? So you might have heard about projects like Bored Ape or CryptoPunks. These are well-known NFT projects where people are spending 70 ETH, 90 ETH to buy, a JPEG image of, this a punk or an ape. But in those cases, that image itself has that value embedded in it. And when people get that image, when they buy that, they've already exchanged value, right? But the example Jeff is giving is with a real world asset, the NFT is a representation of that real world asset, but it's that real world asset that has the value in it. And so when people are transacting these NFTs on the marketplace, Roofstock has to make sure that what they're buying and selling corresponds to that real world asset that has that value. And we've gone through the inspection and other diligence process to make sure that is still true, right? So that's the sort of the next leap in the Web3 world, where you go beyond just the cryptocurrencies and crypto native assets getting traded, and now you start looking at real world applications.
Jeff, something I'm thinking about is so if I'm trying to understand this, I buy this token, which the underlying asset kind of backing the token up, if you will, is the home, right? So I then own the home as well. How does that work for insurance purposes? If I got to go get insurance on this home, am I, Michael, going out to my traditional insurance people and saying, okay, well, I own this home, or who's on title of the home? How does that all work? Is the token on the title?
Yeah. All the right questions. So the way that we're setting this up, each home is titled in its own LLC. So we have a limited liability company where the home is titled. And so that really facilitates the transfer between different parties because you don't have to re-record title every time the home token is sold. The title obviously has to be recorded the traditional way at the county recorder's office the first time that it's transferred into the LLC. And then from that moment on, it doesn't need to be retitled because the only thing that's changing hands is the LLC, the ownership of the LLC, the membership interest, it's called, the share of the LLC. So that's how we unlock that, so that when I sell you my home token, I'm selling you an LLC that owns the home. And you, as the owner of the LLC, you have full control of the LLC and thereby full control of the underlying home. So you can do whatever you want with the home. If you want to rent it, you can rent it. If you want it to be a long-term rental, a short-term rental, you get to decide all of that. You get to decide when you put a new roof on, or if you want to repair the roof instead of replace it. You make all those decisions. As far as the insurance question that you asked, we do have an agreement with an existing insurance company that's tech forward, and they're interested in working on this project. So we've already set that up. The first time you buy a home from us, it will come with 1 year of property insurance that's prepaid. If you want to change that, you can change it. If you want to cancel it and replace it with a different insurer, you can. What we found is that a lot of intermediaries in the space are not necessarily comfortable in dealing with this type of transaction. So we've spent a fair amount of time diligencing a lot of providers in the market, and we think the ones that we have are very good. But it's up to you as the owner if you want to have a specific insurer or a specific title company. You can do that, but otherwise, it's already in place, and it's really as easy as just paying your annual premiums. You don't have to think about it if you don't want to.
Okay, so the follow-up, what popped into my mind immediately, and then we're going to get you guys out of here. But we live in California. So Roofstock obviously doesn't have a very big footprint here because there's not a lot of cash flow potential, or it's much more difficult to make the numbers work as compared to a lot of other parts of the country. So Sanjay, if you buy a home for $1 million, tokenize it, and now your property taxes in California are based on your purchase price. So if 5 years down the road, you sell it to me for $2 million, traditionally my new property tax value is going to be based on that $2 million. But are you saying that because this sale isn't getting recorded as it would traditionally, that my property taxes are still going to be based on your original sale price of $1 million?
In many states, that would be true, but in California, unfortunately, Prop 13 would pick that sale up. So it's a state-by-state analysis, and in most of the states, the transaction would be fine. You'd individually report any capital gains on your taxes, of course, but in California, the transfer does get picked up.
Dang it. They always get you somehow, but maybe in some states, it sounds like that might not get picked up.
That's right.
There's less of an issue.
In many
most
states.
Yeah.
Interesting. Okay. Man, I thought I had this huge unlock, but clearly you guys have already thought of all this. So this is super exciting, guys. We definitely need to continue the conversation. Got a lot more questions, a lot more information I would love to disseminate to our listeners. But thank you both so much for joining me. If people want to learn more about Web3 and blockchain and crypto in general, are there good resources out there that we can point people to?
Yeah, I mean, definitely come to our website to learn about real estate tokenization. That's onchain.roofstock.com. And also, follow us on crypto Twitter. It's at RS onChain. And then individually, like Jeff and I do contribute in Twitter and LinkedIn and other areas as well. So, look us up and follow us as well on those platforms.
And don't hesitate to reach out. We're happy to talk. We're here. We're doing something new. We know a lot of people have a lot of questions, and we're happy to answer the questions and engage in conversations. So ping us. We're happy to chat.
Amazing. Well, thank you both again for coming on, and super looking forward to doing this again soon.
Thank you. Thanks for having us.
Likewise.
Talk soon.
Thanks.
All right, everyone, that was our episode. A huge thank you to Jeff and Sanjay for coming on. We are going to definitely be having them back on again soon. So if you have additional questions about things you just heard or blockchain things in general, we'd love for you to see those in the comment section, wherever it is you get your podcasts, and we will try to get to them on the next episode with Jeff and Sanjay. As always, if you like the episode, feel free to leave us just a traditional rating or review. We love those as well. And we look forward to seeing you on the next one. Happy investing.